This is a holiday week and July 4th is on Thursday. So happy 4th of July week to all of you. And this will be the only video update for the week. So today I want to do something special and I want to walk you through a trade idea and give you some ideas on why this is likely going to be a decent trade setup. So I'll walk you through the process and I'll explain the trade idea and the risk reward. And remember, this is just for educational purposes. Don't feel obligated to take any trades. If you agree with any of this analysis and want to take the trade, that's completely up to you. But today I just want to talk about it and give you an idea of why I think this is a decent setup. So the ticker is INTC, which is Intel Corporation, which is a semiconductor stock. And this is definitely one of those stocks that proves that not all semiconductors are created equal, because from the previous high to where we are closing at today, we are down nearly 40%. So this stock is definitely in a bear market. And we can see how this bear market started with this lower high rejection. We did break down to a lower low. And when we came back to retest that breakdown, we did get another lower high. And on that rejection, we actually built out what's called a head and shoulders pattern, which is a very bearish pattern as long as you do break down below the neckline. And as you can tell from this price action, we did break down below the neckline, and because of that head and shoulders, we just started to flush straight down all the way down to $30. So this is a good reminder of why you don't just blindly buy the dip. Even though we are in a bull market and the indices are near all-time highs, there are some stocks like this one that are still in bear markets and going much lower. And if at any point on this chart you were just accumulating for the long term, you are likely sitting on massive losses at this point. And that is why it is so important to manage risk and always have a trade plan. So the first thing I want you to understand is that even though we are in a bull market, there will be some stocks that are still in bear markets. And that's why it's very important to pick quality stocks with quality setups for the best probability to win the trade and the best risk reward setup. So looking at Intel, we can see it is definitely in a bear market, but there's something about this chart that I'm starting to like, and I'm going to walk you through what that is. And the first thing I like about this stock is I don't really see anybody talking about it, which means it's not overly hyped and it's not really on anybody's radar. And if we look at the fact that it's in a bear market, the first thing I want to understand is, are the sellers getting exhausted because the trend is lower? I know the buyers are not in control. It's the sellers that are in control. And I'm looking for any evidence that the downtrend could be getting weaker and possibly even starting to reverse, because those are the trades where you can get very low risk entries, which means you have a lot of upside reward for very low risk to the downside. And that is what first attracted me to this trade idea to begin with. The second thing I like about this stock is that it does look like the sellers are getting exhausted and building out a multi-week base here. And you can see I drew out this wedge of lower highs and higher lows, which is a form of consolidation. And if I zoom in even closer, you can see the 5 EMA is above the 13 and the 13 is above the 20. And these very short-term moving averages are starting to positively slope, and price is above all three of them. So we have a wedge. This wedge is running out of time on the clock because the end of this wedge is going to take us out to the middle of July, which is before the earnings report. And the earnings report is going to be on July 25th. So I'm looking for that to be a potential catalyst that could help us along with this trade idea, which means we may need to be patient and this trade might not work immediately. But we do know there is a catalyst coming up around the corner, and we do have some objective price action that tells us the sellers are getting exhausted, and there's very early evidence of a potential reversal starting to build up. So that's kind of the understanding of where this stock is currently at and why I think this could be a decent setup. And the next thing I like about this is that if we do break to the top of this range at 32, this is what I call blue skies between 32 and all the way above 34, where there is practically no resistance on a bull breakout. So if we were to get a very bullish move and come up to that resistance and then get a pullback and break above it, that would likely lead to a very strong catalyst that would send us higher very quickly, because the sellers are exhausted and the newfound buyers would be starting to accumulate down here in this wedge. On the bull breakout, we wouldn't have enough selling pressure with no resistance above to stop the stock from going higher very quickly and very rapidly. So I want to illustrate this very quickly with the long position tool, that if you were to enter this trade today, you know you are wrong on this stock if we break down below the previous low, which is down below 29.8. So that is your risk, because if we are going to continue the bear trend, we're going to continue to make lower lows. But if the bear trend is reversing, that means the low should be in and we're getting ready to go higher. And the reward is all the way up here, anywhere between 34 and 34.5. And you can see why this is such an advantageous trade, because we only have to take a little bit of risk for a lot of upside reward. And the reward to the risk is a 3-to-1 ratio, which is a very good ratio. And these are not easy to come by. So we have our risk controlled, we know our potential reward to the upside, and we could even lower our reward to here at 32 and take some of the partial profits if we start to approach the top of that range, and then you can always buy more or re-enter the position on the break of that range. So this is a very simple trade idea because there's not a whole lot going on here that you need to account for. You are simply looking on where you're going to accumulate this position right around the moving averages, which are right around 30.7, and the bull breakout we're looking for in the short term will be a break above 31, get out of the top of this wedge to the upside, and then push to the top of the range at 32. And then the break above 32, we would be looking for that impulsive push towards 34. So this is one of those low risk, high reward bull trades that I love to take in bull markets. And I am going to track this trade. And I do think by the time we finish out the earnings, we will likely see the catalyst that would make this trade idea work. And if it doesn't work, it's completely fine because we have our risk controlled. And because our risk is controlled, we know exactly how much money we're willing to lose for the potential of the upside reward. Again, a 3-to-1 ratio for the reward to the risk is very good. And as long as you continue to take trades like this over and over again, your wins will outweigh your losses. So this is the free trade idea I wanted to talk about. These kinds of trade ideas are what you're going to get in my Discord server. And while this is the only video update that I'm going to have for the week, I will still be in the Discord server giving plenty of updates and plenty of trade ideas as I see them. There simply just won't be any video updates in the evenings. All right, so jumping over to SPY, we were up 0.21% today, and we did bounce off of the bottom of this range, which was the neckline of a potential double top. And remember, I told you this potential double top was more than likely going to end up trapping the bears because this is a bull market, which means prices are still going higher. And when you see a double top in a bull market, that is usually going to be a bear trap, because bears are going to enter the short position without confirmation, and that is a lack of discipline as a trader. Remember, if you want to call this a double top, we need to break down below the neckline, and that neckline is going to require a breakdown below 542. And then below 542, it is objective to short the market and call it a double top for the price target at 537. We did not break down below the neckline, and as you can see, it was a bear trap because we bounced up and we closed back above the 5 EMA and we still have the bull trend. And that means with this holiday week and the low volume, we will likely continue to melt up. And then once we melt up high enough to get the short squeeze above 550, that should be where we get the explosion higher and the short squeeze that sends us to the brand new all-time high price target right around 555. So again, that is what I think is going to happen. Doesn't mean it will. If I am wrong about the bullish melt up and the squeeze to a new all-time high, price will prove me wrong by breaking down below 542, and then we will be looking for 537. So keep it very simple. You should have both of these scenarios in your trade plan and then let the price action do all the talking, which means we are letting the price go higher until proven otherwise. If you're taking the short trade, that's completely fine, but I do think you're taking the lower probability trade because the higher probability trade in a bull market is that will go higher, which favors the dip buyers to make profit, and those are the people that are actually in the winning trade right now after buying at support. So it doesn't mean the bears won't win, it just means they have the least probability. And remember, as I always tell you, in order to be profitable, you need to stack the odds in your favor. So you need to take the high probability trades with the best risk reward setups. This was low risk to buy at support and very high reward if it works out. And that is how you consistently be a profitable trader, by taking the highest probability chance with the lowest risk and the highest reward. If you don't like this trade idea, that is completely fine, but this is how I'm teaching you to be a profitable trader. On the NASDAQ 100 triple Qs, we were up 0.59% today, and just like SPY, I told you this double top would likely be a bear trap, and I did draw a little bit lower on the arrow down towards 477, and we did go down and we did hit that lower target before bouncing, but as you can tell by the close, we closed back above all the moving averages and maintained the bull trend. So price action is telling me there's a good chance I'll be correct. We got the low risk entry today. The bull breakout will be a confirmation above 485 on a price action breakout, then we'll short squeeze higher towards 493. I am only wrong if we break down below 473.86, and in that event we're looking for a push lower towards the gap fill at 468. So it's a bull trend until it's not, which means we're likely going higher until we're not, and as long as we have the bull trend, the path of least resistance for the price action is still higher prices. On the Dow Jones, we were up 0.08% today, and the price is still closing above all the moving averages. As I told you over the weekend, we do have the full bull trend now in the Dow Jones, and the price target I'm giving to the Dow Jones is all the way up here right around 402. But if you want to wait for a bullish breakout, then you're going to need to see the price action break above 394. Now, it is still okay to be bullish with the bull trend above 389, so you can stay bull above 389, or you can wait to get bullish until we break above 394. If we break below 389, it's more than likely not going higher, and that's your cue to get risk off as a bull. On the Russell 2000 IWM ETF, we were down 0.84% today, and we did not get the bull breakout on the attempt. We had the rejection from the resistance between 203 and 204, and we came all the way back down to the support zone just below 201. So as you can tell, the small caps have not been able to break out just yet, but we are still in this low risk entry level if you want to be bullish. You just have to remember to get risk off if we can't hold above this previous low between 197 and 198. So it's up to you how you want to play it. The bull breakout has not happened yet, which is going to require that break above 203 to 204. On the ARKK ETF, we're up 1.14% today. And while we are looking like we're bouncing here, you have to remember this is still risk off in a bear trend below 45. And if we are going to break out of the bear trend, we need price to break above 45. So don't get overly excited until that happens. On the VIX, we were down 1.77% today. So we still see low fear in this market, which is more indicative of that bull trend that I've been talking about, where with the low fear and the bull trend, prices are likely going to continue to climb higher, especially during a holiday week with low volume. If at any point we lose a critical support in the indices, then we will see a spike in the VIX, and then we will start to see high volume panic selling. But for now, we still see low fear and bull trends. On Bitcoin, we are currently trading just above 63,000, and we got very close to the price target at 64,000. And you could see we did get the higher low, higher high breakout, so it's okay to continue to stay bullish above 62,000. If we break 64,000, we're going higher towards 67,000, but in the short term, do understand this is a downtrend, so I wouldn't be afraid to lock some profits here at resistance, or at least wait for confirmation we can break through resistance before continuing to stay bullish. On Nvidia stock, we're up 0.62% today, and the bulls are doing everything they need to do, which is continue to close above 122. And you can see all of these moving averages are still very bunched up right around 124. And the bears still do have a possibility to send this thing lower, but they will need to start breaking below the support at 122. So you could say the bulls are in control above 122 and the bears are in control below it. And the longer we continue to go sideways above support favors the bulls to build up energy to continue to push higher. On Tesla stock, we were up 6.05% today, and we nailed this trade because we officially hit the price target I've been talking about at 207. And you can tell by looking at the arrows, it was a long time coming because I was drawing the arrows at 207 for over a month now. But sometimes trades take patience, and that's why there is nothing wrong with getting in at the low risk entries and then letting time become your ally. Remember, I trade shares, not options. So if you're doing options, time is your enemy because the longer you hold an option, the more that it's decaying from theta. But this trade has worked very well, and now that we're above 207, it is possible we continue to push higher towards 225 to 230. So if you're bullish on this, continue to stay bullish above 207. If we break down below 207, it's up to you whether or not you want to get out and secure those profits. But this is looking like a multi-week consolidation breakout, which is why I was warning you to not even consider shorting this stock. And if you did go against my suggestion to not short this stock, then you got burned, especially today, because this was an absolute bear killer. So remember, when things are looking bullish on the chart, that is not when you want to be shorting them. You want to be shorting weakness and stocks making lower highs and lower lows. And this was a bull breakout making higher lows and higher highs. On Apple stock, we were up 2.91% today, and this was another stock that I told you over the weekend was likely going to be a bear trap, and you could see it did gap up and close near the high of the day and near the top of the range at 218. So again, these are bear trap setups where the bears are getting overly confident in bull trends that they can find the most obvious double top rejections in the state of the market. But unfortunately, when things are that obvious, they typically don't work, and that is why I told you this was likely going to be a bear trap. So this still looks like the bears are trapped. If we get the bull breakout above 218, we will start to run higher towards 228 to 230. Remember, the only way this analysis is incorrect is if we break down below 207. So jumping back over the S&P 500, this is a bull trend until it's not. And it doesn't matter if you don't think we should be going higher. And it doesn't matter if you think valuations are too high. And it doesn't matter if you think the market is rigged. The chart tells us it wants to go higher. And that means the highest probability chance is that the price on the chart will continue to go higher. If we're wrong, we have very clear risk levels and we'll take the small loss. But if we are correct, we are going to have a very low risk, high reward trade and continue to take the highest probability chance to be a profitable trader. This is what I'm teaching you to do each and every day on the Stock Channel Discord server. So if you want access to my intraday updates, my technical analysis, and my trade ideas, that's going to be in my Discord server. And you can find out how to join my Discord server by clicking on the link in the description of this video. So happy 4th of July to all of you. I hope you all enjoy your holiday weeks. Be sure to be safe out there, and thank you for watching. I hope you're crushing this market. And as always, I will see you in the next episode.